Money soldier, I thought I told you. Only rockin' with the agent and the broker, yeah. Move over, we getting bolder. Making moves like the agent and the broker, yeah. Generational wealth, they bout that. Yeah, we took some L's, but we bounced back. Financial literacy, got that. Closing up the wealth gap, yeah, I'm black. Welcome to the Agent and Broker Podcast, hosted by Julian and James. And you know they bringing nothing but that black boss talk, man. Cause there's no currency stronger than the black dollar. And it's time we let the world know. But first we gotta grow though, and that's for sure.
What's going on, everybody? What's up? What's up? What's going on, Julian? How you doing, brother?
What's going on, James? I'm good. How you doing tonight?
Man, I'm good. You know, I tell people, man, I'm always blessed and highly favored.
Yes, sir.
You know, so it's always a pleasure to be here, man. I think that's our second episode. And It's just like, you know, I feel like the adrenaline every time I'm coming in, you know.
Oh yeah, ready to come, ready to give it to him, man.
Yes,
I'm always ready to give this knowledge, man. Pass it on. So much in my brain. I'm just ready to get it off to the people.
Exactly, man. You know what got me though? The intro. It's like, you know, it's the black wealth, bro. Like we gotta bring this to our people. Like I'm Haitian, right? And I deal with a lot of Haitian people, African American, and I see what's going on with the type of brainwash we've been dealt with when it comes to wealth. You know, where we get the shortest end of the stick. So it's pretty cool, man. It's a pleasure to be here, brother.
Likewise, man. And I appreciate you being here. But what's going on, y'all? Family, good to be back another week of the Agent and Broker Podcast. I'm your co-host, Julian, the agent, license W626089.
And I am James, the broker, license number W282336 down here in Florida.
Yes, sir.
Yes,
sir. Florida, we here. And tonight, guys, we're going to be covering what is called a debate, man. It's been a debate for a long time. People been debating it or comparing the two. It's going to be term insurance versus permanent insurance. I'm sure you heard of both of them. Tonight, we're going to break down, you know, the differences between both, the definitions, going deep into both of them, some real life situations and stories, the pros, the cons, everything. We're going to bring it all together. And hopefully you guys leave tonight with some, you know, good enough knowledge to be like, okay, let me make a change, or let me make an adjustment in my life, and let me look at this a little different. You know what I'm saying?
100%.
Yes, sir. So tonight we're gonna start off. First, we want to give a shout out to a great sister in the Atlanta area. Her name is Pinky Cole. You probably heard of her from Slutty Vegan, one of the top vegan restaurants, fast food restaurants in the A. If you haven't been, man, I advise you to go. I'm not advising people things, but I advise you to go to Slutty Vegan. It's an experience. The burgers are amazing. But Pinky and her business partners, man, they've decided to insure 25,000 black men in the city of Atlanta. So their goal is by 2023 is to provide life insurance for 25,000 people. Now, if that's not amazing, y'all, I don't know what to tell you, but that right there, that's inspiring to me. So to see somebody like this with a successful business in a short amount of time, take that and give back to the community in a way that we generally need it, and we really need it. And that's through, you know, financial wealth and bridging that gap. So hats off to Pinky. We thank her for that.
100%, man. Shout out. And I mean, think about it. Whenever somebody actually get involved in life insurance in a level like that, and especially you're looking at, you know, towards black men in Atlanta, it's a big deal. You know, somebody once told me, he says, think about it. us black men, we already have some type of profile, right? And a lot of us, we are victim of, whether it's gunshot, whether it's whatever it may be, right? The person says, well,
Mhm.
imagine this. If every single black man and black woman was insured for $1 million, you know and every time one of us become a victim of whatever, our family receive $1 million, and that's $1 million that go into families and communities. And I feel like it's such a great example that gentleman took, and when he said that, simply because our communities could be much better with life insurance by not having GoFundMe account all the time, where
Mhm.
one of us, we pass away, and you see mom, dad, brother, sister going through GoFundMe just trying to bury us. But imagine we take care of that with a small amount of uh, um a contribution, where you get
Right.
a million or $2 million term policy, and it's a big difference. It's a big difference will be to our community if everybody covers. So shout
Right.
out.
Right.
I'm very thankful you share that with us today, man, and I think it's a big deal, a very, very big deal for our
Yes,
community.
sir. Absolutely. And thank you for the input on that, James. And so again tonight, guys, we're gonna get into it real quick. It's gonna be, like I said, term insurance versus the permanent insurance. You got, that's whole life, that's universal life. Um, Pretty much those two are are the only two permanent policies. But let's dig into it. When we talk about term, what is term life insurance? A term life insurance policy is a type of life insurance policy that has a specified end date, like 20 years from the start date, and the death benefit will only be paid out if the policyholder dies during the chosen term. The death benefit is the amount of money that will be paid to the beneficiary when the policyholder passes away. And that death benefit is tax free, of course.
Yep.
And the most common type of death benefit for a term policy is a level term policy, which means that the value of death benefit stays the same for the entire time of that your policy is active. This benefit can also be decreasing, meaning it shrinks over time, typically in 1 year increments. And that's coming from US News.
Mm-hmm. Straight up, and a lot of people in our community, they are very familiar with the term insurance. And after you read this article, and you may be thinking, okay, so you can get it for like 20 years. So what happened? Like, why would I want somebody a life insurance for 20 years? So to me, a term insurance is not for everybody. And this is who typically I'll recommend to get a term life insurance. And you can look at it, you can look at this in many different way. A term life insurance, if you have small children, I want you to think of that. For example, if you have small children, at that point, they be very vulnerable. They're not independent yet. So what you need to do is to make sure, in the event you pass away during the time they're depending on you, you make sure you have coverage in case you pass away. And of course, in case you get sick as well, because like we discussed last time, life insurance cover you when you get sick as well. So anyway, somebody with small children, great benefit for you, at least until your child turn 18 or 21. As long they're under your wings, you want to make sure you are protected. And another way as well, term life insurance can pay for their college and the event you're no longer here. You can actually fund their college with your term life insurance. And another one, last but not least, I believe even real estate investors, if you acquiring a big portfolio, you expanding your portfolio, say you're gonna hold a property for 10 years, well, get a life insurance for 10 years for the value of the property. So if the property is $350,000, then you get a policy for $350,000. So in the event you pass away doing that holding investment, then your that mortgage in the property is paid off, and the cash flow from that rental property, if it was a rental property, the cash flow go directly to your family as a permanent income. So I believe that's a great way to set up your family by buying term insurance, extremely affordable. But it doesn't fit everybody. It doesn't fit everybody. But that's my input on that part.
Yeah, you're right. And to add in on that, the example you made about the real estate and that play right there. Even on term policies, a lot of people don't know that with some companies, they provide living benefits with those, meaning if you get sick, like heart attack, cancer, stroke, or anything like that, and you're not able to work, you're able to forfeit your a portion of your death benefit, so that you can cover those mortgage payments. You can pay it down some. Hey, if you want to take a vacation, you can do that. So they do that to give you access to that money while you're living. And if it was $350,000, like James said, you'll have access to about probably 300,000. Let's make an example, $300,000. You have access to that, and of course, you have to go through the claim process to receive your living benefits. But you don't need a permanent policy to have those type of living benefits.
Correct.
If that 100%. Makes sense.
100%. And if you do have questions, put them in the comment below. We'll be looking at them and answer them maybe after the show if we have time, or during the show we may even answer some of them. But yeah, that's really it, man. Just our people need to be educated on that, to make sure that you put in your head, life insurance is life insurance. It's not death insurance,
Right.
So it protects you doing the when you need it. Exactly. You put money in your pocket if you get sick to continue to pay your mortgage, continue to put food on the table. So with those living benefits you just mentioned, people need to understand that, that's why life insurance is called life insurance.
Right. Absolutely. Mm-hmm. And then let's get into permanent. So permanent insurance, again, like I said, your whole life, your universal life. So permanent life insurance policies offer a death benefit and cash value. The death benefit is money that's paid to your beneficiaries when you pass away. The cash value is a separate savings component that you may be able to access while you're still alive. Permanent life insurance lasts from the time you buy a policy to the time you pass away, as long as you pay those required premiums.
100%. And with the permanent life insurance, and especially, I don't want to get into details, like, but if I'm thinking of an IUL. So when I sit with clients, right, I always recommend both. Some people think people can only have one life insurance policy. No, you can have multiple life insurance policies. So when it comes to a permanent product, specifically the IUL, Index Universal Life Insurance, what I tell the client is, and I'm telling you as the viewers and people who's listening, when you buy the term life insurance, maybe you have a newborn, maybe your baby is 2 years old, so you get a term life insurance for 20 years, right? To cover that big liability. So I always encourage to get a permanent life insurance as well. So after the kids graduate and they at the house, now you've been invested in a permanent life insurance, preferably an IUL, for the past 18 to 20 years. Now you're sitting on a lot of cash value, which eventually can be used for anything. Maybe remodel the home, you remodel the house after the kids leave, or maybe you stack more into it and use it for retirement. So there's a lot of things you can do with that cash value. And it's your money. You use it for whatever you want. So I always encourage people, especially if you have small children, when you take life insurance, if your budget permits you to do so, take two. Take one to cover the big liability, which is the children and the mortgage. Okay, you can get like $1 million of term insurance for under $100. It's very, very affordable. And then get something like the IUL, Index Universal Life Insurance, that would carry you after that 18, 20 years after your kids get out the house and go to college and whatnot. So you're investing to protect the kids, and also you're investing in your future at the same time. That's what I see in life insurance and permanent life insurance.
Right. That's a really, really good example. And like James was saying about the permanent side of life insurance, you can utilize that for college expenses, or if you want to remodel your house or something. I've seen countless times people go into the equity of their house and remodel it when you can be coming over, you can come over here and get tax. Of course, you can get that's still tax free, but here you can get money out your policy where you don't have to pay that back. You won't default on that loan or anything of that such. So it's always a good way to utilize the cash value in your permanent policy. It can be there for anything you want. Emergency, if it's not an emergency, if it's a vacation, that money is there. That's your money. You're just putting it away. You're letting it beat inflation, of course. You're protecting it from market volatility. And of course, it's tax free. So you really can't beat those.
You can't beat that at all. You can, you can, like, people don't understand. We can use life insurance, especially with the index, to solve any problem.
Any problem.
So I was speaking with a client and like, hey, I want to pay my mortgage faster. Well, you know, you can actually fund an IUL. And instead of paying your mortgage in 30 years, you can pay it in 15 years.
Right.
You can pay it in 20 years or even faster. Right. Because if you overfunding that IUL and you're getting compound interest on it, 7 to 8% average a year, you keep, putting money there in compound interest. So what happened is at one point, say, your home mortgage is $200,000, and at one point you owe like, 80 grand on the mortgage. Guess what? You can literally go to your IUL or your life insurance product, get $80,000 and pay the mortgage off. You can use that for whatever you want to use it for.
Beautiful. It's beautiful.
Yeah.
And to add on to that part with the mortgage and people typically would be like, I want to, like you said, pay the mortgage off or pay it faster in like 15 years or so. But you can still beat it in like IUL if you put the difference into your policy that you're gonna give to the insurance company. I mean the mortgage company. If you put the difference to your policy instead, that money will compound every single year. And by the time you were going to pay that 15-year mortgage off, you'll probably have more than what you're going to save up or pay towards that mortgage. Because a lot of it's going to go to interest, of course. Yep. Not everything's going to the principal. You're going to be paying interest as well. So it's a good tool, man. Like James said, it can solve many, many problems, if not all financial problems out here in the world.
Right. And not only you getting all this compound interest, and I know you probably sound good to the view, it's still a life insurance product. You still get all the living benefits. You still get the death benefits.
Protected.
I mean, it's just an amazing product, man.
You got everything you need.
Everything you need can be put into that IUL.
Everything. So, again, what kind of life insurance is right for you? And it just depends on you, who you are. Every person is different. No matter if you're, early in the game, maybe in your 20s or so. Typically, if I have somebody who's young and I know they're not really responsible, but hey, you need life insurance, let's get it. So a nice little term product, like, could you afford $15 a month? You can get something as low as $15 a month. That's less than people spend on haircuts. That's less than people spend at a barbershop. That's less than people spend on alcohol. That's less than people spend on pretty much anything, food, Starbucks all month. Like $15 can get you covered with enough coverage to, if something happens to you, your parents or whoever else is your beneficiaries will be taken care of. 100%. And again, you have the term versus the permanent, where right here where it says term, the term covers temporary expenses like your mortgage, like James actually mentioned, and then permanent covers lifelong needs like estate planning, retirement income, or final expenses. So you're getting everything inside the permanent, whereas in the term you're getting pretty much a little bit of benefits, but not as much. I like to compare term to renting instead of buying a house. So if you want to say you were renting a house or something, or renting an apartment for the rest of your life, or for 20 to 30 years, you can rent an apartment. Why not buy instead of rent? When you buy, you have a bit more benefits. Yeah, you do have to deal with certain things, maintenances and all of that stuff, just like a house. Insurance does have maintenance in it. There's policy costs and things of that such. However, if your policy is done correctly, and you won't have to worry about that. It will pay for itself. Insurance pays for itself in the permanent policy. 100%. And then As we go down this list right here, you have that choice of coverage for 10 to 30 years in the term product. And then you have coverage for your whole life in a permanent product. So would you want to rent or get a lease? And I can compare it to cars as well, man. You could get a lease for 10 to 20 to 30 or so years, or you can buy this car and permanently have it for the rest of your life, this vehicle, and that vehicle is going to upgrade and give you more benefits, throughout your entire life. Every year, you're going to be adding in benefits of your money that's going into that permanent policy. The term, of course, like James mentioned, is typically cheaper than that permanent policy, but it's also cheaper than the monthly coffee's expenses. So, like we said, you can get something for $15 to $20, depending on your age. Early 20s. If you're in your early 20s to 25, you wouldn't be paying. You're not paying a lot at all for life insurance. When it comes to term products, they're really cheap. Really, the insurance company is gambling against you. You're paying them. You're paying the insurance company in a return for coverage. To like, hey, I need you to cover me for these amount of years. If nothing happens to you in that term, that they at the end of the day, they got their money. You walk away with either the option to upgrade, or you walk away with nothing. And we've seen both sides. So that's something we'll get more into after this, after we cover this slide. And the permanent policy is typically cheaper than your monthly cable bill. So you can get a policy for $175 a month to $100 a month. And you can have permanent life insurance. It's possible. We've seen it. I've done policies for, starting people off at $100. And, of course, we want to gradually pull that up, but we can start off. You can still start off. If you're younger, you can start off at a lower amount. And that lower amount will get your policy active and started, pay for the policy expenses and everything up front. Now, when you start getting more financially responsible, more financially savvy, and you can start putting more money away into your policy, you will want to do that as well. And then the term policy is also designed for young families with temporary needs, like James mentioned as well. And then permanent is designed for those with lifelong needs, a desire to cover final expense. And if you don't know what final expense is, that's pretty much your burial expenses, your funeral coverage of anything of that such. So, permanent policies can consist of, like we mentioned last week, you have your universal life, whole life, and final expense is a sort of permanent policy as well. And you're covered for your entire life.
100%.
That kind of break it down for you guys.
Yeah, that break it down pretty. I mean, it's right on the screen. If you're watching live, or if you're catching this, it's right on the screen. So that's all it is. And I just want to say a story before we go to this to the next slide, Julian. Yeah. So somebody I know, a client of mine, she wanted to retire and receive $3,000 for the rest of her life. So as we were talking about it, she's 48 years old. And like, okay, so what I'll do is I'll work on the case for you. So come to find out, she wants to retire at 65, $1,800 a month for her to receive $3,600 a month at retirement. Why? Yeah. Because she waited too long to actually get that benefit.
Right.
But like you said, man, somebody in your 20s, your 30s right now, and you really want to use this and maximize it for anything, including retirement, man, that money would double, so fast, and especially if you can overfund these policies. Yeah. It's a sweet deal, a very, very sweet deal.
Right. That's a good point you brought up there. And people starting late, a lot of people don't like to face the facts. And the easiest way to wealth, I mean, you can't save your way to wealth, but you have to invest your way or get into a vehicle that is gaining compound interest, of course, and gaining a good amount of interest on your money. Your money needs to be working for you. You're not going to be able to work for the rest of your life. So you need to find a way to have your money work for you. And what is a better, vehicle than this beautiful product of insurance, life insurance.
Life
you know
insurance.
what I'm saying? Like it's crazy that you say that. People generally start so late, they don't think of their retirement in their 20s. When you're in your 20s, man, I've sat with so many people, or I've mentioned it to certain people in my age group, or even in their 30s, and they're like, I don't need that. I don't want to think about death. I don't want to think about these things of that such. And most people think that they're gonna, automatically somehow make millions of dollars with their ideas and their businesses of that such. Hey, you need a logical plan to get to that wealth as well, because as we know, the statistics are not in our favor when it comes to successful businesses. Actually, what is it, like 80-90% of businesses, small businesses, fail?
Yeah, 80-90% of them.
Those numbers don't lie. Like, statistics don't lie. So you must come to that reality and be like, okay, you can actually take away $500 a month or so and compound that for 30 years and you'll be a millionaire. Most people want the millionaire lifestyle when they're young, but the average person reaches $1 million when they're in their 50s, man. You can go Google that right now. When you're in your 50s. So social media is giving a false perception of millionaires, is giving us a false perception of this type of lifestyle that people believe that they can achieve in such a short amount of time. However, you have to really be dedicated in those things, that what you're doing. If everybody was that business owner or that entrepreneur, everybody would be doing it.
100%.
But you have to also look at reality, like, okay, well, how can I compensate for that? If I'm not that entrepreneur, if I'm not putting in these late hours, if I'm not getting up and I'm not making it happen by any means necessary, how can I work my way else around it? There's other people who do it, so why can't you?
100%. And the most wealthy people have insurance.
Yep.
I think I read somewhere Warren Buffett, I think, has over 60% of his portfolio in insurance.
He invested in what is it? Globe Life is actually Warren Buffett's company, man. And people don't know that Warren Buffett owns a lot of he owns Berkshire Hathaway, who owns Geico. He owns Geico, man. You don't even have to know that though, because his company owns a major percentage of Geico. And Warren Buffett, if you guys don't know, he's one of the most sought out, if not the best investor in our day and age right now. It's probably in his 90s or something. He's still investing. This guy lives a very simple life, but he's just been an excellent investor his entire life. And like James said, 60% is into the insurance industry. And like we mentioned last week, that's the backbone of everything, the backbone of financial services. Insurance will be the last domino to fall if we have a major crisis again. If everything goes wrong, insurance will be there. I guarantee you that insurance companies will be there.
100%.
Everybody uses them.
Insurance is the true backbone of America. Look it up.
The world, man.
Look it up. Of the world.
Of the world.
Of the world.
Yeah, of the world. And in a move forward from, well, not really move forward, but kind of to go more in the depth of things, so we can kind of nit in the butt some of these misconceptions and bad financial advice that we were given by the older generation, the government, employers of that such. I like to call out the baby boomers a lot, in their advice of financial advice of buy term and invest the difference. So tonight we're gonna debunk that, man. We're gonna bring you guys some facts and research that has been done, that was on entrepreneur.com, that has been done by a University of Penn professor who really dug deep into this buy term and invest the difference, Dave Ramsey type of advice. And if you look at anybody in the insurance industry, we're looking at the Dave Ramsey and we just like, that's not it. You can ask James.
That's not it. The whole buying term and invest the difference. And I'm sure if you're listening to this right now, or you're watching us live, or 10 years from now, you probably heard of that term before. Buy term insurance and invest the difference. And I've been doing insurance since 2015, been licensed. I haven't met anyone that actually worked for them, you know? So when it comes to that, the whole concept of this was created, I think, I don't want to quote this, but about 44, 45 years ago, with a specific company, which I'm not going to give them credit by mentioning the name, but all to go against whole life insurance policies.
Right.
And it's a uninformed, very, very uninformed to our population of that concept. And like you mentioned, Dave Ramsey, this guy, he can get you from A to B. But if you're looking from getting from C to Z, building your wealth, it's definitely, something you have to do more study. And when it comes to buy, term and invest the difference, because I have so many stories, and I'm just going to give you the most recent one, sitting with a guy who did just that, years ago. And come to find out, whoever agent he sat with told him that he wouldn't lose money. And I don't know why you would tell somebody that if you don't have their product into a life insurance product with index, okay, because you cannot tell somebody they cannot lose money. So he did purchase the policy term and invest the difference. And when I went to the house, we was doing a financial analysis, he picked up that document and he was a little, not too happy. We got the paper in front of us, and he lost money during the pandemic, and he's still under when we was talking about on this conversation. So I want you to think of this in long term, right? If let's just say you do decide to go with buy term and invest the difference, and by the way, the person who's telling you this will probably convince you this is the best thing in the world. Highly recommend you have somebody do a second look. Say you investing the rest on that term for the past 30 years and you're ready to retire. And when you're about to retire, it's a recession happening. It's a pandemic happening. What do you think that investment is doing? If you guess it's tanking with the economy, you're absolutely correct. You're absolutely correct. I was actually talking to a friend of mine today with a potential client. He got in his office. She's 70 years old, has her money in the stock market. She did a rollover, not a rollover, but she have her money with a specific company. And I think she had it for like 3-4 years. Right now, she's under. Think about it. She's 70 years old. So whatever amount of money she put in initially, she's actually under. It's crazy. Now, I'm a fan of, if somebody want to diversify their portfolio, they want to get into crypto, they want to do this. But if you're investing all your money in the stock market, I don't know, man. It's 100% gambling. So I have yet to see this term work for somebody, Julian. And it's just unfortunate. A lot of people in our, in our community being that actually got pushed into them. And it's not really working the way they present it to be.
I agree. It's been worse than people really talk about it. They don't really talk about it, and what we're gonna do is talk about it. You know what I'm saying? We're gonna bring it to y'all, and we're gonna bring it to you clear, and we're not gonna sugarcoat it, because this stuff needs to be addressed, and nobody's really addressed it. Primerica's still heavy in the community, which is cool and all, and I have nothing against them as well. However, they do use this kind of a lot, this term, buy term, invest the difference type of approach, which as we see here, it hasn't really worked. So I'm going to read this article from entrepreneur.com, and it states, is this the worst financial advice ever? A skeptical look at the common advice to buy term insurance and invest the difference. So, of course, it's an opinionated article here. So anyone who knows me knows that I don't follow conventional financial wisdom. Me either. Until after I've asked a lot of questions. Call me skeptical, contrarian. What is that?
Scrupulous?
Scrupulous. I don't know, but we're gonna go past it or whatever. You know, it's in my nature to question any and all schemes that involve my hard-earned money. I'm the same way. James is the same way. I already 100%. Know he is. And this guy's not wrong. So these faulty assumptions that people have been told to do. So first, what's happened to the difference that Americans have supposedly invested? When people tell you to buy term, invest the difference, if you don't know what that means, so pretty much you're buying a term insurance policy and you're investing the difference of what it would have cost you if you got a whole life policy at that same exact death benefit amount. So if that was $1 million in term coverage or in whole life coverage, you'll invest that difference and buy a term, which will probably be about like $50 to $60. You'll invest the rest of that, maybe $200 to $300 into like something like a mutual fund or something like Dave Ramsey says. So you buying term and you're investing the difference of your money. Pretty much the same thing as what it does in the permanent life insurance policy. It's really buying term and investing the difference, but the insurance company is doing that for you. So first, what's happened to the difference that Americans have supposedly invested? The typical investor lost 49% or more of his or her savings twice just since 2000. The typical equity mutual fund investor, meanwhile, has earned 3.98% annually for the past 30 years, beating inflation by only 1.3% per year. And that's according to the latest analysis by Dalbar, which is one of the top financial institutes, financial news out there in the financial world. So you can go look up Dalbar if you want to, but these numbers aren't lying. Only 3.98% has been earned through mutual funds. So your money's barely gaining more. They're telling you to invest it over here in a mutual fund, but you're not really even gaining anything. And the way inflation is looking right now, man, a mutual fund investment, I'm not saying it's bad, but hey, if you're getting 4% on your money, inflation's about at 2 to 3%, you're winning 1% on your money. That's almost like what banks give you, pretty much.
Yep. you're really not ahead of the game with that.
Yeah, you're not at all. And another idea behind buy term and invest the difference is that by the time term policy holders reach their 50s and 60s, they're no longer in need of that term policy. Their investment portfolios will have ballooned to such massive size that they won't need life insurance anymore. They will be self-insured by their own wealth. And here's another problem. Many of us purchased decades ago are worth far less today in inflation adjusted dollars. Most term policies have a level death benefit for the term of that policy. If you buy or actually rent, so like he's saying, you're renting insurance, a $250,000 20-year term policy, and inflation averages 4% per year, your policy will lose 56% of its value over its 20-year term. Even worse, most people who put money into a term policy have nothing to show for it. According to a Penn State University study, 99% of all term policies never pay out a claim. I'm gonna read that again. According to a Penn State University study, 99% of all term policies never pay out a claim. 99%.
Wow.
You paying the insurance company. Do the math right now. If you had $50 a month in term coverage and you did that 50 times 12. What's 50 times 12?
50 times 12, that will give you $600 times 20.
$600. Now so you're going to pay that times 20 years.
A total of $12,000 to the policy, to the insurance company.
You gave them $12,000
of your hard earning money, and you don't die because 99% of these policies don't pay out. That's crazy, right?
So who's winning? Who's winning the gamble?
Insurance company is winning. 100%.
You're betting against yourself, and they betting against you. So if you're gonna pay me, I'll cover you if something happens. If nothing happens and you lose this term, like, hey, either upgrade or it is what it is. But they get their money you are pretty much just paying away. You're giving your money away. Like you said, you're renting insurance. And if you're trying to become financially free or financially stable in the future, giving away $12,000 in 20 years is not a great investment. It's not the best thing to do. So that was something that I really wanted to point out in this article, man, that 99% of all term policies don't pay out.
It's
And
crazy.
okay, so just to get back to it, proponents of term life say this is because most people let their policies lapse. Man, I can tell you how many people that I know whose term policies have lapsed. But even if you keep your policy in force, you are still renting and just one payment away from having nothing to show for it. If there's anything more expensive than paying for something that the most likely holds no benefit for you.
That's a strong article, man. Straight to the point. And from a very strong source.
Right.
You know,
strong source. And that's, we all know, entrepreneur. Everybody knows that's like Forbes, anything of that such. But you have people who had bought term insurance for years and they sat on it. They didn't really do anything, or a lot of them lapsed. People don't even know that they lapsed because people change bank accounts, or they no longer have this bank account, and then they forget to, add their insurance into the new bank account. And once that 31 days to 60 days that goes up, if you have a term policy, your policy is done. It lapses. So you can't really go back to that policy. If you had a permanent, at least the permanent would at least pay for itself through the cash value until until it lapses, if you didn't put any more money into it for like 10 years or so. So that's how those lapse. But term, that's gone automatically. And I had a client whose term did lapse, and they tried to go back in and change it, but it's like, okay, well, if you did want to do that, you have to make up the certain amount of time that you didn't pay. And by then you backed up like $600. It's just like, well, you have $600 to cough up right now, or nah, I'm just not gonna have it. And that's one thing about that term. And a good example of permanent, or like James said, the IUL or such. My policy, when COVID came, I didn't fund my policy for about 5 to 6 months. Nothing happened.
Yep.
The policy just paid for itself from all of the cash value that was accumulating in the policy. So I didn't have to pay that. I just took it from there, and now I just fund that money back into it. Of course, I just add a little bit extra here and there to make up for that money that I did, that they did pay for. They used to pay the premiums from the cash value. So that's another good thing about having a permanent policy over that term policy. You have the ability for it to pay for itself. And if you don't have that, then I mean, you're out of insurance, and that's not a good thing to be out here swimming naked.
Nah, don't be swimming naked, man. I had a client who did 9 months, Julian. He didn't even, she didn't pay a dime for her policy during COVID.
Sheesh.
Because she lost her job. Yep. She called me, say, hey, Mr. James, as you know, with COVID, yada, 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 I'm not able to maintain my payment. What happened, from there? I said, don't worry. You do have an index universal life insurance. So I will call you in a few minutes. So I contact the life insurance company, merge the call, and they let her know, hey, you have up to, I think, like a year and a half where you don't have to pay this policy. So she did 9 months not paying her policy. And in the meantime, if she had passed away or get really sick, she would still have the death benefits or living benefit. So it's something you cannot beat. As opposed to the term insurance, the moment you miss a payment, you're just a couple payment away from that policy lapse. Yeah. And typically most carriers will give you about 90 days. So if you do want to keep that policy, then you have to come up with all the 90-day payment you missed out. So It's very, very different. So I'm so happy we covered this article, because it give you more insight as the viewers that, man, I do have a term and I'm investing the difference. Maybe I need to take a look at it. And that's why we are having those discussion. Life insurance is not a very popular subject, but guess what? We know the value of it so much, we're going to bring it to you no matter what. And it's all for education. You know, somebody once says, if you want to know what to do, just follow what most people are not following. And life insurance is one of them. There's a reason for that. You know, so but anyway, it's
don't follow the herd. When it comes to financial advice, financial anything, never follow the herd unless you want to fall over the mountaintop.
There you
honestly
go. Pretty simple.
You following everybody else is doing, man, you obviously are not really aware what's going on. You don't know. If you're following everybody else in the financial advice that the government is preaching, that mainstream news is preaching, or anything of that such, if you're not aware of your surroundings and what's going on, man, I encourage you to dig in, read, and
100%
and research what's going on, because everybody's doing business with each other to keep you distracted, keep you away from the real truth and things of that such. Imagine if we had everybody like Pinky is doing, everybody covered, every child in our communities, every child in our hoods covered with insurance policies, and you wouldn't be seeing these police officers killing black people. Man, come on, man. Them folks will be at the police union ASAP. The insurance companies will be fighting for black people. If we insured all of the children, if we insured all of the youth, they will be at their door. Them police not killing nobody. They would think twice before pulling the trigger, because now you're hitting them in the pockets, because now death benefits are having to be paid out.
That, you know, take that to the bank. Think about what Julian just said. It's crazy. And this is how it is. And if you really want to be powerful in this country, have life insurance back you up. You
Definitely.
know, and I want you to think of this, right? Think of this in our community, you know, because we all about, and this show, we want to use financial services to build black wealth. You know, we want to educate you. We want to educate you about finance, about money, about what's being taken, you know, it was being hidden from you. Think about this, right? I learned that I forgot when, but anyway, listen to this. When we in our community, what is the most watched sports, right? What is it? You're gonna think of football, you're gonna think of basketball, you're gonna think of, you know, at least those two sports to start. Okay, so now think about this, and this is a true story. What I'm telling you, you can look it up. Pay attention to what I'm saying. When you go to commercial breaks, what commercial plays on these channels? Because based on the commercial that are playing in the channel would make you understand who the audience are, who they are marketing to, right? So look at this. When you're watching the NFL, when you're watching NBA, such sports, what do you see? McDonald's commercial, Nike commercial. What are a couple of other ones? Papa John's, Domino Pizza. And when you look at who buy most of these things, is a lower income family. A lot of them are black folks, our community, right? So there's a reason you're seeing those being marketed to you. There's a reason behind it. Nothing happened by accident. Everything is articulated in a certain way to target a group of people.
Oh yeah.
And when you look at the golf channels, you know, polo, like these sports, you know, some of the commercial that plays, Rolexes, Ferraris, and guess what? Life insurance commercial companies like AIG, Prudential. You'll see those logos there. Why? Because they're marketing into a specific group.
Wow.
I want you to think of this. I'm sitting here, I'm doing training a couple years ago, Julian. There was about 30 people in the room, right? And I'm making a presentation of, you know, the financial industry. And when I bring all these life insurance company logo up, I say, how many of you, these logos look familiar? Out of about 30 people, there was one white kid. He was about 23, 24 years old. sitting to my right. He put his hand up. I said, "Oh, so you familiar with this?" He said, "Yeah." I said, "Which one?" He said, "Well, all of them. I know Prudential, I know NLG, I know AIG." But I say, "How do you know this?" Like, well, they play every day and watching sports. Think about this. Me and my dad, we watch a lot of golf, so these companies are there like very, very often.
Wow.
And of course, come to find out, long story short, he has life insurance, right? But what does that tell you? 99% of the room did not know a logo of a life insurance company. Why? They don't want us to know about this stuff.
Yeah, it's been hidden for years, man, since 1800s. When we go into that,
why would they want us to know?
So much history to this, guys.
Bro,
I can't wait to break it down, like the history in this industry and how it's been, strategies have been put in place for the information not to be given to our people, to our communities. And it goes deep through race baiting claim, insurance ratings and policies and different things, man. So there's articles online, there's research that have been done, and we want to destroy all of the myths and clear all of the smoke about life insurance and bring it to you guys and package it a different way so we can at least help everybody get insured, help everybody, help us. We want to help everybody help us insure the community so that wealth gap that they're marginalizing us to be, the black wealth to be zero by 2053, that doesn't happen. We want to put a dent in that. We want to be the reason why that doesn't happen. So 100%. We need everybody's help to help us spread the word and like and share these podcasts. Share it throughout your timeline. Keep sharing it. Share all of them every single week, and maybe throughout the week. Just share it. Share it on YouTube as well. We're on there as well. Share our stuff on Instagram, because the more this information gets out, like James said, it's not being shown on TV. We're not seeing this stuff on the sports channels. We're not seeing it when we're watching ESPN or when we're watching the game, the football game, or anything of that such. We don't see these commercials of life insurance companies. So that's why you need to share this, because if you can share this, you may reach somebody. You never know who is watching it. You may not be the one to watch it, but somebody on your friends list, it could impact and touch them before it even touched you. So that's the beauty of sharing and and supporting this podcast. And we definitely want to bring you guys some heavy stuff throughout the weeks and throughout the year. And we're going to be doing some major giveaways and a lot of good, fun events and things of that such.
We have a lot in our pocket, to come throughout the year, and we need your support, like Julian said, to share these conversations, to make sure our community is well informed, well educated, so we don't miss out on a lot of things we're missing out on a lot of things, so there's a lot of things that's been hidden in plain sight where you have to do your own research to find out exactly what you're missing out on or what you're not taking advantage on, because a lot of the other communities, they're taking care of it. They're taking care of themselves. So it's up to us, if we don't do it, who's gonna do it? So it's up to us to share and spread the news. Make sure you subscribe to the YouTube channel. Make sure you follow us. Every time we come up with something new, you can be well informed and share those videos, because it's not often you see two young black men coming together to bring value like that, and a subject that is really, really not talked about enough in our life. That makes sense. So no matter what it takes, we're always gonna do the best we can to come here and bring you value and educate you, so you can make a decision that will benefit you and your family financially.
Yes, sir. We appreciate that, James. So, guys, that pretty much concludes our episode tonight. But I did want to give you the heads up. Next week, we have a special guest that's going to be joining us on the Agent and Broker podcast. This guy is, the real deal, a former NFL player, played for the Miami Dolphins, played at the University of Miami. This guy is a financial business owner. He has a cleaning agency as well. He also has a Airbnb management company. This guy's doing this thing in South Florida. It's Mr. Larry Hope. We'll be hosting them next week. You know, you guys bring your pen, your paper, and be ready to take some notes, because we have a very solid entrepreneur that's going to be on next week. And I'm excited about this podcast and this interview with him. And that's going to be big for the brand. That's going to be big for people to understand life insurance and to understand how coming from an athlete into the world of business. So if you're an athlete, if you played ball or anything of that such, man, I encourage you to be on this podcast next week at 9:00 p.m. Larry Hope will be in the building. He will be, giving you guys that game. And James, I think James met him as well. You know, we were all in the same company at one point in our careers. So we all branched off and done a lot of things on our own now. But, you know, he's still killing the game down in South Florida.
Yeah, man. Very good guy, man. Very sharp. And anyone who's been in a competitive state, this guy played football. Yeah. There's a certain way of thinking, you know. So I'm really looking forward to the interview and to the podcast next week. So make sure you guys tune in and share this, and help us spread the word.
Absolutely. All right, guys. That ends our show for tonight. Y'all be safe, stay dangerous.
There you go.
Keep your head on the swivel. Protect your life, your family. If you do need any, if you have any questions or you do need any insurance of any such, you can go to our website, www.theagentandbroker.com. You can fill out our lead form. We have everything there for you, and we'll be glad to get back to you, help you out, you and your family. Or if you are on my page or James's page, if you reach out to one of us directly, that works as well. And just let us know. Give us some feedback on the podcast. Let us know how we're doing, what you guys want to hear, and how we can always better this and make this better for you guys. So thank you again, and thanks for joining us this week. And we are out.
All right. Bye-bye, everybody.
Right. Later.
The agent and the broker put you on the right path. And if it ain't adding up, then do the right math. And when you wanna come up, some might laugh, but them be the types to be the overnight staff. Always be a worker, we tryna be some owners. Sometimes might strike out, sometimes we hitting homers. But one thing's for sure, when the money gets uncovered, hit the agent and the broker. Say thank you to my brothers.